Our latest research on consumer electronics shows that 2014 will be a year of deteriorating operating conditions within consumer electronics. This is primarily due to a slowdown in the growth of smartphones. Smartphones, along with tablets, have really been the main growth drivers for quite some time in consumer electronics. But now these markets have really matured in many even emerging markets, and this is causing a pretty sizable slowdown in growth. So we're going to probably see growth of about less than 20% for 2014. That's compared to almost over 40% from what we've seen the year prior. Similarly, in tablets, we're also going to see volume growth coming in just under 20% for this year, and it was over 50% the year prior. Again, same story as with the smartphones, but exacerbating things for the tablet demand are really the large screen smartphones, which have become widely popular. And they are starting to eat into the demand for small tablets. And these were really big growth drivers for 2013. Within these conditions, we also have falling unit prices. As growth slows, we see competition really intensifying. So in these conditions, it's pretty clear to see why many manufacturers will look to new growth opportunities and new revenue streams. And wearable electronics looks to be the primary choice for most companies. But even here, we do expect to see a pretty significant volume growth. So we're likely to see about 22 million units sold this year. And that number is going to reach almost 260 million by 2018. With this kind of growth, it's really easy to see why manufacturers would really look to this as a large potential for a new profitable revenue stream. But as we look at how many similar products have behaved in the past, we do expect to see a very drastic decline in prices as these products become mainstream. So by 2018, even with this type of volume growth that we're going to see, we're still likely going to be looking at wearable electronics accounting for about 3.5% of the overall consumer electronics value sales. So it's not really a revenue stream that's going to support very many large manufacturers. So for them, demand for more established categories, large categories like LCD TVs, laptops, remains crucial. These are very low margin products in most cases, and growth is stagnant really. But they do offer vast opportunities in terms of market size, and they are also very stable, especially compared to growth rates in some of the other categories.